Main Street households in America are not doing well. Their incomes are not growing. In fact, there was a piece out this morning in the Wall Street Journal called, A Tale of Two Economies, and
right.
That's exactly it. When the correction comes, that spending is going to shut off, and we're going to find out where we are, and it's not in a good place.
Alongside Miranda Kahn, J.D. Hayworth welcoming you back now to America's Forum. We just heard the former director of the Office of Management and Budget under President Reagan, David Stogman, on CNBC, pointing out middle-class American incomes aren't growing as much as those at the upper end of the socioeconomic scale.
And both sides of the aisle have concerns that America's middle class are being left behind as the economy grows and the rich see returns, but not so much the wealthy.
Well, let's talk about money matters and a guy to whom money matters. Well, it matters to all of us, but especially to our next guest, Tom Hutchinson, who is the senior editor of High Income Factor newsletter at Moneynews. Tom, thanks for joining us from Newsmax, New York.
Well, thanks so much for having me.
So, Tom, do you agree with David Stogman? Are we really in trouble in terms of the middle class and where the economy's headed?
I think he is. I think he's generally right. I think that when the economy eventually turns south, when we head to the next recession, because of the fundamental problems like low wages and poor job growth, we're going to be in a deeper hole next recession than we are in most of them.
Tom, data compiled through the census shows that income growth for middle-class citizens over the last decade has not peaked over 40%, yet the upper 5% have been hovering around 70%. So what would you say is the reason for this kind of disparity in earnings growth?
Well, I think what you've had is an artificially inflated economy by the Fed, and all that extra money has propped up the market and asset prices in a way that benefit the wealthy more than the wage earner.
Well, mindful of that, we always hear talk about tax relief in the abstract. We heard some talk after the election that the president and the Congress would get together on not so much tax relief, but tax reform, reforming the way we pay taxes and the tax code. Has that gone out the window with the president pledging vetoes and just the general tone of strident disagreement down in D.C.?
Well, you'd never want to say that anything's impossible, but it seems pretty close to it. I mean, as an observer of these things, I don't put high odds on Obama coming around and embracing tax reform in any way, shape, or form what the Republicans have in mind. But hopefully I'm wrong. Maybe they'll get a spirit of cooperation and they'll get something done, but I don't think the odds are too good here.
A lot of people watching may be saying, well, I think the economy is doing rather well. Gas prices are very low, lowest they've been in years. U.S. dollar is extremely strong. What would you say to those folks watching that are saying, I don't get it? It seems like it's getting better to me.
Well, I do think it is getting better. I mean, the U.S. economy is in better shape than anywhere else. And I think the chief reason for that is because the U.S. economy is singularly magnificent. I mean, look, after we won the Cold War, the world's playing our game. We're good at this business stuff. And the U.S. economy is resilient. Now, what I would say to people is, this is still a lame recovery because there really haven't been needed fundamental reforms, like you mentioned, tax reform, some deregulation, among other things. The economy still has one hand tied behind its back because of that. But even with that, it's the envy of the world right now, and this is probably the highest growth. It is the highest growth we've had in the recovery so far.
Yeah, if this is the new normal, though, the temptation is always, Tom, to say compared to what? But let me set that aside for a second and talk about the Fed and the whole prospect of seeing a hike in interest rates. We understand the Federal Reserve is saying, hey, let's be patient. The status quo will stay in place until mid-year. If the borrowing rate doesn't change between now and June, what would that mean to the average American?
Well, they're not going to, they're targeting to raise the rate in June and possibly as late as September. I don't think it'll mean too much to the average American because we're talking, I mean, let me put things in perspective. In 2009, the Fed lowered the discount rate, which is what we're talking about, to where it is today, near zero. That was priced for a near depression scenario, when everything is horrible and we're on the precipice of Armageddon. Now here we are 6 years later, when the economy has been recovering, has had a good year, and we're still at that price. So to move up from there, just a little bit higher than Armageddon, isn't going to change the dynamic. Rates are going to be still very low on traditional fixed income investments. They're still going to be very low on loan rates, and I don't think it'll change the game at this point at all for the average consumer.
A minute 30 remains. Tom, if you were advising, I don't know, an everyday guy like me, what to look at and where to put my dough, if you feel comfortable doing this, just between us and everybody listening, what would be your suggestions in general? What should somebody be doing? Got about a minute left.
Yeah, well, I think the market's kind of different this year, or at this point, than it's been in the past couple of years, in that the averages are still high, but it's been sort of uneven. You have utility stocks and real estate investment trusts skyrocketing, and everything in the energy and commodity class getting slaughtered. So what that means is some of the stocks in the energy and commodity space have gotten dirt cheap. What I like particularly here are the infrastructure stocks like Kinder Morgan, which pipe and store oil and gas and really aren't that affected by lower commodity prices. They make their money by the fact that there's going to be a whole lot of oil and gas sloshing around the country in the next few years. That price has been held down by all this oil price crash. And I think it represents that company as well as other infrastructure companies are a good buy right here.
Tom Hutchinson, as always, we appreciate your expertise. Of course, as you are the senior editor of High Income Factor newsletter at Moneynews, we like the news you bring us about money and the informed opinion, and we hope you have a great weekend. Be careful watching the Super Bowl. Speaking of the Super Bowl, more Super Bowl commercials. The right man on the left coast, James Herson, joins us.